This is The Bottom Line. The Bottom Line on 938 Live.
U.S. Federal Reserve Chair Janet Yellen has signaled continued low interest rates in her semi-annual report to Congress, and she said the labor market was far from healthy and the Fed would keep monetary policy loose until hiring and wage data show the effects of the financial crisis are completely gone. Now, for an analysis of her comments and more, we now have on the line Sani Hamid. He is Director of Wealth Management at Financial Alliance. Now, Sani, Ms Yellen said asset valuations aren't out of line with historical norms, even as some prices seem to be on the high side. Do you agree with her?
Yes, I do think so. I think if you look at valuation for the U.S., it's not extremely expensive, but it's really above what the long-term levels are. Only specific sectors are probably very expensive, as mentioned, the biotech and maybe social media stocks. But otherwise, the rest all are above average, long-term average, but not overly expensive.
Right. Now, when do you expect the U.S. to start raising interest rates, and when can we see the impact of that coming through to the financial markets?
Right now, based on what we see, surveys and also the future markets, by and large, people expect the Federal Reserve to raise interest rates in the middle of 2015. And actually, this is a bit earlier than what we expected, let's say about 12 months ago, which was early 2016. And this is because the U.S. economy is picking up at a slightly faster clip than one expected. I don't think there's going to be a lot of impact because the Federal Reserve has done a very good job in communicating the increase in interest rates to the market. So a lot of it has been really factored into the market. So unless they're surprised by moving earlier or moving at a much higher pace, I don't think the markets will be utterly surprised by the move in the middle of 2015.
The Fed also expressed concerns regarding valuations on small company stocks. Will this have a knock-on effect on the Singapore market?
Well, I think except for maybe some knee-jerk reaction, I don't think anything much will transpire from that, given the fact that in Singapore, the valuations are not as stretched as that of the U.S. So we may see some pullback in the U.S., but maybe very little or even none at all in the Singapore context.
So how will the U.S. dollar and other Safehaven assets perform in the wake of her remarks?
Well, I think if you're talking about Safehaven assets, currently I don't think there's any particular reason for people to run into Safehaven assets. So I think Safehaven assets will still remain in demand, albeit people have yet to move money into it. What I do see is the U.S. dollar itself potentially going forward weakening because as the U.S. asset markets, that is the stock market, becomes overvalued, I think money will start flowing out from the U.S. in search for regions which have better value, and one of those regions is emerging markets. People will start selling stocks in the U.S. and transferring some of the money out into, for example, China, South Korea, or even Taiwan. Then that itself will translate into a weaker U.S. dollar, but a stronger renminbi, won, and even Taiwan dollar.
Now, elsewhere, China's economy expanded by 2% in the second quarter from the previous quarter. What does this say about the pace of the global recovery?
Overall, the pace of the global recovery has been very encouraging. It's not been very strong, but at the same time, it's been stabilizing and gradually inching up, especially for the developed economies. What we may see over the next 12 months is a passing of the baton to the emerging markets, which have underperformed over the past 12 to 24 months. So we may see an overlap where we have the developed markets or developed economies chugging along nicely, and now coupled with the developing markets moving along nicely. So we may have a period whereby global growth is pretty okay and pretty strong. I think that period will come over the next 12 months. I think it's quite exciting, and I think the market may not have factored a lot of that in, so we could see some upside in the markets because of this.
All right. Well, thank you very much. That's Sani Hamid. He's Director of Wealth Management at Financial Alliance. You heard it here on The Bottom Line on 938 Live.